Gold is a hot topic in financial circles. There are a lot of people that love gold, and there are people that are a little bit skeptical about it and prefer things like stocks or real estate. And historically, there have always been people that come out and say that gold is the place to be. It's a store of value that is uncomparable to anything else. And throughout history, you see people that have wanted to have gold. The central banks are always trying to accumulate it. And even back in the day in the Roman Empire, an ounce of gold bought you a cow, and today it's about that same thing. And so it's held its value very well. Steve, you've been in this business for a very long time. What are your thoughts on gold?
Well, Grayson, when you brought up gold, I remember an old movie that came out in the early 60s, and it was with James Bond starring Sean Connery. The title of the film was called Goldfinger. When the villain of the movie was interviewed, he was talking about how luxurious and beautiful gold was. And I think there's a lot of people that kind of fall for gold for that. There's other people that buy gold strictly out of nothing else but fear. They fear everything is going to go terribly wrong, and they need gold because our money is going to be worthless. Everything is going to be worthless, and they got to have gold to keep its value.
That's a very good point. And I'm glad that you mentioned gold being a store of value, because that's really what it comes down to. All these channels on YouTube say that we've got currency devaluation. They say that in years to come, what we've seen with the currency being down 98, 99% over a certain time frame is just going to be the same. And they're right about that. And they say that the way to combat that is to have the same purchasing power with an ounce of gold that you buy today 40, 50, 100 years from now. Is there any good reason to that line of thought?
I would say yes, Grayson. It's going to hold its purchasing power. What I think that most investors want is they will want an investment that is going to go up more than just what inflation has over the last 5, 10, 15 years. So instead of yielding in the last 40, 50 years a 4 or 6% return, they're going to want something that's going to give them 10 or 11 or 12% return. And you know, gold is stationary. You buy an ounce, 10 years from now, it doesn't reproduce and give you 2 ounces. You're still going to have that 1 ounce of gold 10 years from now. And when you're purchasing a diversified portfolio that reinvest capital gains and dividends, what you're going to end up having is more shares down the road than what you have today.
Steve, you hit the nail on the head with talking about how buying shares and getting dividends will create more wealth for you, but I think also what is important to keep in mind is that as their earnings increase, that your shares of those earnings also goes up. So if you have a share of $100 this year and the firm has a good year next year, you might have a share of 110. And so it'll keep increasing like that and appreciating in value. And instead of sitting there and being something that holds its value, it's something that is a wealth creator. It's like owning a farm, and you're able to breed these animals, and the farm gradually grows bigger and bigger if you manage it correctly. It's the exact same thing with the stock market. It's the exact same thing with a business. And instead of holding that purchasing power steady, which can be a good strategy for part of your portfolio, you're able to be an active manager and do something towards getting yourself wealthy. So Steve, what's kind of your approach as far as trying to be an active manager and chase something that's going to produce value for your clients?
Well, Grayson, we invest in a diversified portfolio of stocks. Now, we do have some precious metals in some of our portfolios because we do follow the biblical principle of putting your portion with 7 or 8. What everybody talks about today is diversification. We do that in our portfolios. We think it's wise to do that. So having a portion of your portfolio in gold or silver or some other type of precious metal is not a bad idea. I believe where it gets to be a bad idea is when these companies talk you into putting all your investments into precious metals.
Exactly. It's almost like buying a TIPS bond where they guarantee you to pay the inflation amount every year. And so if you put 10 grand in there this year, it's going to be worth what 10 grand this year is worth whenever you put it in there, which isn't really investing. It's just holding money and investing by addition instead of allowing that compounding to do work for you. So if you've made it this far, I expect that you are a smart investor and that you're going to do the wise and prudent thing and find something that's going to create income for you, find something that's going to create value instead of just storing it, and it's going to actually be able to make you into a wealthy person one day. Steve, do you have anything to add?
Don't let fear drive your investment decisions. You need to do your planning, do your research, and don't let fear drive your investment decisions, because when you do, you're going to come out the short end of the stick.
That's good sage advice, Steve. And until next time, make sure you're being diligent and try and figure out what the best investments are for you and for your risk tolerance. And until next time, may God richly bless you.